Hello, everyone. This is Julie Schwartz. Welcome, and thank you for joining us today. I'm the Senior Vice President of Research and Thought Leadership here at ITSMA, and I'm going to be your host for the webinar. But before we get started, I just have a few housekeeping instructions. If during today's briefing you have a question, please use the Q&A feature on the menu bar, and your questions will be fed to the presenters. And if we don't have time to respond to all the questions during the briefing, we will respond to you afterwards. So we do appreciate your questions. Within 24 hours after the briefing, you'll receive a link to download a PDF of the presentation. And within 48 hours, you'll be getting a link to the playback. And the links to the PDF and the playback can also be found on our research library at the ITSMA website. Now, please join us in conversation on Twitter. We're using the hashtag #MPM13. So we'd like you all to join the conversation and tweet. Now, I'm very honored today to be joined by two very distinguished guest speakers. And so I'd like to introduce them to you. Our first guest speaker is Laura Ramos. And in her current role, Laura serves as the Chief Marketing Officer. She's the Vice President and Principal Analyst for Forrester. And she is a leading expert in B2B marketing and has hands-on experience in corporate, industry, product marketing, demand management, and social media. She helps Forrester CMO clients plan, build, and deliver marketing programs that combine traditional, digital, and social approaches and helps them lead their businesses and fuel their company's top-line growth. Now, Laura has also worked as a practitioner for more than 20 years experience in marketing, and before rejoining Forrester in 2013, she ran industry marketing for Xerox, one of ITSMA's members, and so we were really pleased to be working with Laura in that capacity as well. Our second speaker is Laura Patterson, and she's the president of VisionEdge Marketing. And during Laura's 30-plus year career, she's owned and led various marketing, sales, and management initiatives. I've had the pleasure of working with Laura now. This is the second study that we have done together, and I have found her to be enormously knowledgeable about data and analytics and how to leverage that for organizations to make strategic market, product, and customer decisions. So Laura's areas of expertise include the science side of marketing. So it's the analytics and the processes, the systems, the metrics, and the research involved in marketing. And so I know that you're going to enjoy hearing from both Lauras today, as well as myself. And we're going to be sharing with you the results of a joint ITSMA, VisionEdge Marketing, and Forrester research project that we just finished. So we surveyed over 400 marketers and members of the corporate executive team. They primarily were from B2B companies, and 50% of the people who responded to our survey represent companies with annual revenue greater than $1 billion. So these were large companies, as they came from a wide range of industries. And what we learned in the research is really fascinating, and we look forward to sharing our insights with you. So this is a very exciting time to be a marketer. You know, there's no doubt that marketing is in the midst of a major transformation due to things like changing buyer behavior. You know, we know today that the buyer has more power than ever. We also see the rise of the social buyer, and there's a data explosion, and we have channel proliferation, there's a changing technology landscape, and of course there's geographic expansion and hyper competition. So in response to all of this, we see that marketing priorities are shifting, and that marketers are rethinking, they're reskilling, and they're reinventing their organizations to keep up with all this change. But we also see that some people think that in the near future, that marketing departments may not exist. So Gerd Leonhard, he's an author, and he's a strategic advisor and the CEO of a company called the Futures Agency. And he's also someone that the Wall Street Journal calls one of the leading media futurists in the world. So when this man talks, people listen. And he was recently quoted in Harvard Business Review blog as saying that the idea of having a separate marketing department is going to vanish. Now, McKinsey, in their writings, is also talking about business leaders undertaking initiatives that may traditionally have been left to the chief marketing officer. So what's going on? You know, why is marketing as we know it today at risk? Why are other executives taking on the roles and responsibilities that belong to the marketing organization? Well, Laura, and I are hoping that the research we present today will shed some insights into what's going on here and also help you take marketing's destiny into your own hands. All right, so we see that all this change is happening and that marketers are trying to keep up with that change by reskilling and shifting their priorities. And as the priorities shift, we see that marketing is going in one of two directions. So marketing is bifurcating. On the one side, we see that the marketing organizations, there are organizations that are setting the strategic direction for the company, that they're creating genuine customer value by instilling that outside-in orientation to drive business strategy. You know, marketers are looking forward, and they're assessing the market and the opportunities, and they're providing insights on customer wants and needs, collaborating with the lines of business leaders as well as with the sales leaders. So these marketers are defining what to market and how to market. And as strategic advisors to the business, they're earning, or they've already earned, that proverbial seat at the table. Now, the other group of marketers seem to be entirely focused on demand generation, nurturing leads, and aligning with and supporting sales. So they're tracking and reporting marketing's contribution to the pipeline. Now, don't misunderstand me. You know, what they're doing is very important to the business. But these marketers have lost sight of the full breadth of the value that marketing brings to the business. And they don't speak the language of the business. You know, marketing is much more than cost per leads and sales support. So these are the marketers that are being marginalized. These are the marketers who are perhaps losing some of the marketing responsibilities, which are being taken by others in the organization, specifically the strategy group. They're the ones that are being painted into this marketing communications and sales support corner. So because the business still needs that strategic direction and that input for innovation, it's no wonder that other executives are kind of taking up and the marketing activities. And if marketing doesn't step up and really claim their rightful place in the business, it's going to lose it. And I wanted to just ask Laura Ramos, I know you've been doing some research at Forrester. Are you seeing the same kind of phenomena at Forrester?
Yes, Julie. First of all, thanks so much for asking me to join you today and Laura Patterson. It's, on behalf of Forrester, we're really happy to join this research. Julie, as you know, I've had a recent excursion at Xerox, and that brought me back to Xerox, or brought me back to Forrester at the beginning of this year. And so in that time in between, I would say that some of my research, of course, my research hasn't been recent, but it is kind of fortuitous that I do have something to share in this regard, in that we've just completed a different survey with our friends at the Business Marketing Association, the BMA, of about 117 executive marketers. And in that research, to just kind of demonstrate that we're seeing the same sort of thing, about 3/4 of them said that they did have a seat at the executive table and that they were, in the process of marketing was firmly embedded in the decision-making process. What was interesting, however, is that the same group, when we asked them, who are you collaborating with more, dramatically more in the past today than you were in the past 2 years, half of them said they were doing it with sales. And that was second only to IT, in terms of the other organizations that they're spending more time with. And at first we kind of scratched our head a little bit and said, wow, doesn't marketing already work with sales? But I think that finding shows that there's this demand that, because of content marketing and digital and marketing automation, Julie, and many of the things that you mentioned, that sales need sales enablement and sales support from marketing more than ever. One of the telling things that we saw in the research, too, is that, 76% of these CMOs and senior VPs of marketing said that they find their leadership, the other members of the executive team, the board of directors, judges their success and failure much faster than they did in the past. And I think this speaks to the whole issue of how do you measure marketing's performance and manage its performance, and really what is the role of dashboards and reports and tools like that play in the process.
Yeah, agreed. And the thing that we're seeing is that marketers, if they want to get the attention of the C-suite and be respected and being looked at as the valuable strategic drivers that they should be in the business, with the full remit of what marketers do, not just sales support, they really need to speak the language of the business. And, they need to make sure that they're communicating their contribution to business results. And absolutely, the actionable dashboard is one of the ways.
One of those ways, exactly.
And in our survey, we asked, does your marketing organization currently produce a marketing dashboard? And the answer was 60% of marketers are producing a marketing dashboard. But we also asked, does your marketing organization present that dashboard to the executive team? And what we found is that 3/4 of those who are producing dashboards are presenting them to the executive team. So not everyone is actually communicating the marketing results to the executive team. And 40% of the companies don't even have a marketing dashboard. They may be measuring what they're doing, but they're not reporting it. So, some interesting findings from the study. We saw that the larger the company, the more likely they are to have a dashboard. And also the product companies, so not the companies that sell products as well as services, they're more likely to have dashboards. Now, despite the fact that 60% of the marketers we surveyed are creating dashboards, and that 3/4 of those are presenting them to the executive team, we found that less than 10% of C-level executives are actually using the data, metrics, and analyses that's developed by marketing. So it's 6% of the CFOs are using marketing data, and only 9% of the CEOs. So we also see that more of the business unit leaders and sales leaders are using the marketing data, but even those percentages are lower than I think that the marketers would hope for. I mean, if we are seeing, as you say, Laura, that tighter collaboration between sales and marketing, shouldn't more than 16% of the sales leaders be using the data that marketing measures and reports? So, and by the way, we asked this same question in our data-driven marketing survey 2 years ago, back in 2011, and the numbers haven't changed. So there seems to be very little progress over the last couple of years. And so the question is, why is this? And Laura Ramos, it's great to have you. Tell us the reasons why this is.
Thanks, Julie. I think, there are three main reasons here, and the data is going to show this in just a second when we get into these slides. But it's that a lot of the marketing activity that marketing reports on in these dashboards is focused on what marketing does and doesn't necessarily have a direct correlation to business outcomes in the way that it's presented today. There's a lot of focus on operational efficiency, but not really effectiveness. And then, there's also a focus on what have we done and not necessarily where we're heading or what insight we can gain from the data that tells us where we should be going. In the survey, for example, we asked the question, how confident are you that you know which metrics and business outcomes your key stakeholders care about? And kind of using a net promoter kind of scoring methodology, we decided that the top 3, those who said 10, scored an 8, 9, or 10, were the ones that were confident. And you can see from this data that with a mean rating of 6.8, the majority, 55%, are not confident or neutrally confident in their ability to know which metrics and outcomes are key to their business. And that's a bit disconcerting, because if you kind of look at what marketing reports on, their dashboards then tend to be focused on themselves and not necessarily what drives the business. In the survey, we asked which performance metric categories do you include in your dashboard. And you can see that the high end of the scale is around things like sales pipeline metrics, what marketing spends on. Naturally, budget is always an issue, and ROI, but around campaigns and leads, not necessarily the return on investment of marketing overall or what the impact of the business is. So it's about marketing activity and how well we're spending the money. In the bottom of the list are things like, well, what is our contribution to the customer penetration or their retention and loyalty, to overall marketing share, or how well are we owning the category? And yes, these are more difficult things to measure, but they're also the kinds of things that business cares about. And then, again, the third main point is that we ask the question, are data analytics, are you using those as a predictive tool or to report on past performance? And the majority of our respondents said, we're talking about what we're doing, and not necessarily using that data to drive marketing. And I want to invite Laura Patterson into the conversation at this time and kind of ask the question, so Laura, where do you see marketing should be focused instead? What are some of the kinds of things that marketing needs to think about in terms of the information and data that they're presenting to their peers?
Thanks, Laura. Thanks, Julie, and hi, everyone. It's great to be a part of this webinar and share these insights, and hopefully they will help all of you be able to do a better job than what you're doing today or improve on what you're doing today. And in answer to Laura's question, the way to think about this to start with is, what's the things that the C-suite talks about when they're in the boardroom or the break room? What are the conversations they're having? And they have a tendency to focus on 5 major areas: profitability and margin, customer value, revenue, shareholder value, and market share. So if these are the things that are keeping them awake at 2 a.m. in the morning, then as marketers, we need to be sure that we understand how do we affect or impact or contribute to moving the needles for these key types of business outcomes. And so that's really, in our estimation and our thinking, the place for marketers to start is with what it is that the C-suite cares about. Now, if we start with that in mind, we can begin to create a connection between our marketing activities and investments and these business outcomes. In fact, lots and lots of research, ours and Forrester's and ITSMA's and many others, have begun to sort of weave together the linkages between business outcomes and marketing efforts. So let's take a look and see how that plays out. So if you think about how to capture the attention of the business leaders, and you begin with the outcomes in mind, shareholder value, revenue, market share, for example, and the others, profitability, margin, customer value. And you think about, okay, what really drives that? Well, 2 primary things drive that: investor satisfaction and loyalty, and customer satisfaction and loyalty. So as marketers, we need to think about, well, how do we move those needles? And we, in marketing, and all of us who are familiar with Phil Kotler know that there's really only 3 things we can really do in marketing to move these levers. We can find, keep, and grow customers. So customer acquisition, customer retention, customer growth. So everything we're doing, one way or another, must tie to one of these 3 key marketing objectives. So as marketers, and you're building out your marketing plans and you're building out your metrics, you want to be thinking, how do we connect our metrics to customer acquisition, customer retention, and customer growth? And if we look at the programs we're generating, we need to think about, okay, so do our programs move the needle on consideration and engagement? Do they affect preference and satisfaction or endorsement and advocacy? And those are the kinds of things that our program should be looking at and have metrics associated with, and then show the relationship between those program results and these marketing objectives, the accomplishment of the marketing objectives. In order to do all of that, then at the very bottom of the ladder is where we can begin to think about the execution or tactical elements and how we put together tactics and activities in terms of the channels, the positioning, the message relevance, and the fact that we're thought leaders, thought leadership, trusted communication, so that we will be able to engage our customers and our prospects. So this is really how the research shows the relationship. And yet, as most marketers are really moving forward, they start at the bottom thinking all about the stuff they're going to do and how they're going to measure those things, and they're not really making that chain very clear to their leadership team. So if they could make that chain clear to the leadership team, that will be helpful, because we really need to understand that back to that conversation that occurs in the boardroom or the break room, the C-suite wants us to paint a picture of how we're contributing to the business. And so the metrics we bring forth need to focus more on things like share of preference, share of wallet, propensity to purchase, category growth rate or ownership, product service adoption rates, innovation revenue rates, how much of the revenue is coming from new product recently innovated, our ability to command a price premium, pipeline volume, value, and velocity. So if those are our kinds of metrics, how's that different from what we're seeing in the study in terms of what we're actually doing predominantly as marketers? So the kinds of things we saw in the study that most marketers are talking about fall into primarily two categories. Activity-based metrics, which is very hard for the C-suite to really relate that back to business outcomes. So how do we really relate with, downloads and media mentions and fans and followers and click-through rates and website visitor traffic registrations, demo downloads, all of those things? How do we relate that back to business outcomes? It's very difficult for them to do that if we don't do that for them. It's the other primary category that most of the marketers in our study talk about reporting on are operational in nature, as Laura was explaining earlier. And so while these are really valuable in gauging our efficiency, they're not very valuable in helping the C-suite understand our impact and value. So when we're talking about campaign ROI or cost per lead or customer acquisition costs, our marketing influence pipeline, leads per rep, lead conversion rate, program spend, all of those kinds of things, again, getting very efficient is great, and so all that says is, well, they can do more, rather than are we doing the right things? And that's really the kinds of questions that we want to be able to answer. Not only are we doing the right things, but then what decisions can we facilitate as a result? And so what should we do? So now that we understand the situation, what is it that marketers can do? So as leaders, marketers as leaders in the organization, we really do need to tap into the power of the data and analytics from the perspective of advancing the business, not just reporting on our stuff, but in terms of advancing the business. So while today most marketers have gotten very good at sort of measuring and reporting on the stuff, the things we do, the doing, and we've gotten pretty good at using that to allocate, budget or justify the budget or even do some specific campaign type of work, what we really need to start spending more of our energy on and focus on is how to use the data and analytics and the metrics to show that we're identifying new or emerging customer segments or markets, because that's helping drive the business, or how we're using it to drive innovation or develop new offers and services, or to predict customer buying behavior so that we're more predictive in nature and we can help with the forecasting, and then use it to analyze purchasing patterns so we can prioritize the timing and the offers that we're making in our campaigns. So those are some things that we can start doing right away. One of the things that we've learned is who's doing this really well. And so Julie's going to come back and talk about what's going on with marketers, who's doing it really well, and what they're doing better and differently.
Yeah, thanks, Laura. Yeah, so in our research, there was good news. we uncovered some marketers who are doing a better job of measuring and communicating their contribution to the business. So we asked the marketers, and in the study, and also there were some executive team members, CEOs, we said, what grade would the CEO, or you, if you are the CEO, give your marketing organization for its ability to demonstrate its value and contribution to the business? And we found that 27% of the respondents are able to measure and report the contribution of their marketing programs to the business. And we call these the A marketers. We had 38% who fell into the B marketer category, where they know that their marketing programs are making a difference, but the contribution to the business outcomes were not really measured and reported. We also found that another 29% give themselves a C, and then 6% a D. So what we did is we said these A marketers are the leaders here. The B marketers kind of the middle of the pack, and then the C and D marketers are the laggards. So what do we know about these A marketers? Well, one of the most important things we know about these A marketers is that there's a correlation between marketing's performance and changes in market share and customer satisfaction and loyalty, which are two very important business outcomes that are high on the C-level executive agenda. So 70% of the A marketers report material increases in market share compared to 50% of the middle of the pack marketers, and as I said, those were the B marketers, and only 38% of the laggards, who were the C and D marketers. And we see a similar pattern for customer satisfaction and loyalty. The A marketers and even those B marketers are seeing increases in satisfaction and loyalty with the customers, whereas the laggards are not seeing that same improvement. So being an A marketer has its advantages, and what we want to do is take a closer look at exactly what these A marketers are doing differently. In the survey, we asked the 400-plus participants a series of questions about what they currently do and their challenges. And when we analyzed the data by marketing performance grade, we were able to determine what it is that the A marketers are doing that the others aren't doing. And what the A marketers do falls in three different categories. It's alignment, accountability, and analytics. So the first thing that A marketers do that gets them, to where they are, is that they are speaking the language of the business. And what I mean by that is that they understand how the business leaders are evaluating marketing's impact, and therefore they're able to connect those dots between what marketing does and the business results, kind of that ladder that Laura Patterson took us through. So that link between marketing activities and business goals is clear. And it's also clear to the leadership team how marketing is impacting the business outcomes that they care about most. We also found that the A marketers are accountable. They measure their performance and they report the results. And most do that through a marketing dashboard. So we saw that significantly more of the A marketers have actionable marketing dashboards, and that they're presenting those dashboards to the leadership team. And finally, we see that the A marketers are also using data analytics more than the other marketers. Now, like their peers, they are using data and analytics to report past history, but they're also going further, and they're using the analytics as a predictive tool. And they can do this because we see that they have better access to analytical skills. They have invested in acquiring the analytical skills that they need, the tools to support those skills, and also they're investing in building analytical models. Now, as good as the A marketers are, we did see that there's room for them to improve. So while the majority of A marketers are producing dashboards and presenting them to the executive team, what's on their dashboards does not necessarily meet the needs of the C-level executives. So this was a little surprising for us. What we saw is that even the A marketers' dashboards are emphasizing that marketing activity and efficiency over the business outcome metrics that Laura Ramos was talking about. So the three charts on this slide show the performance metric categories that are included on the marketing dashboards for the A marketers, the middle of the pack, who are those B and D marketers, and the laggards, who are the C and D marketers. And then as you look at those three charts, you see that the composition of the dashboards are really not all that different. So there seems to be a disconnect here. You know, the A marketers say that they're able to measure and report their contribution to business outcomes. And we even know that some of the C-level executives that answered the survey said that their marketers are doing that. But the dashboards are still dominated by sales pipeline metrics and marketing costs. So remember, as important as lead generation and lead management and nurturing are, marketing's remit is much larger than sales report. You know, and if marketing doesn't speak the language of the business and tout its more strategic contribution, it's going to continue to paint itself into that tactical sales support corner.
Yeah, Julie, it's Laura Ramos. Just for a second, I think that previous slide also kind of demonstrates just how embedded the need to report those kinds of sales-oriented metrics are, and it's just really difficult to kind of get over that hump of reporting on the pipeline activity and moving into the broader aspects of the business.
Yeah, and I think it's definitely because you said those are the things that are easy for marketing to measure. It's their activity. And it also is easy for them to produce a dashboard from their CRM or marketing automation systems.
Right, because they're usually connected to the sales systems, exactly.
Yeah.
And that's where I was going to kind of jump in and say I think it has a lot to do with what they use to produce their dashboards. So if, excuse me, so if it's a push of a button, sort of the path of least resistance, I can, push the button on my marketing automation platform or my CRM platform. I can get a pretty report, and therefore, voila, I'm done. That, while that is great that we have those wonderful, amazing tools and can do that today, we may be shortchanging ourselves.
Yeah, because that isn't necessarily, as you said, what the C-level wants to see. So we know that even the A marketers aren't perfect. It's a journey. Right? There's very few marketers that we have seen in our work that have really arrived at that destination. But we do know that the A marketers in our survey are definitely ahead of those B, C, and D marketers. So this slide has mean ratings on it on a 1 to 10 scale, where the marketers were evaluating the effectiveness of their marketing dashboards, and in particular, the way they are able to use and get value from their dashboards. And in all three categories of performance, you can see that the A marketers are ahead. But in truth, the highest number there is a 7.6, so that their performance is less than stellar. But nevertheless, the A marketers are better at using their dashboards to track the performance of marketing activities. They're also better at tracking how those marketing activities are contributing to marketing achieving its objectives, and ultimately, the impact of marketing activities on those business outcomes. So what have the A marketers done to get this advantage? And it all comes back to that alignment and the accountability and the analytics, but really what it starts with is the alignment. And it's the fact that these A marketers understand how the business leaders evaluate marketing effectiveness, and they connect those marketing activities to the business results, going through that ladder that Laura Patterson took us through. And they do this because they know which metrics and business outcomes their key stakeholders care about. So again here, the data is on a 1 to 10 scale, answering the question, how confident are you that you know which metrics and business outcomes your key stakeholders care about? And you can see that the A marketers are significantly more confident. So that's the starting point. You have to know what's meaningful to your senior executives. And this is going to be different for every company. So how do you find out? Well, you have to ask. And once you know the metrics and business outcomes that the C-level executives care about most, you can begin to establish those links with your marketing activities and build those dashboards that convey the full value that marketing brings to the table. And so now we're going to have ask Laura Patterson to walk us through in more detail the process for doing this.
So just to kind of back up a moment, Julie, you're exactly right. Getting clarity around the business outcomes and asking those very specific questions. And we always encourage every marketer before they initiate any program, put together any marketing initiative or objective, to always ask, what's going to be the specific measurable business outcome that we're expected to impact? Be sure you know that right from the start. And then secondly, how that program or activity is going to contribute. Like, what actually needs to move? In what direction does the needle need to move, and how far does it need to move in order to know that it's making a difference? And then lastly, how are we going to measure that this program actually achieved its targets? So those are three key questions every marketer should be sure they have the answers to, and that's a great conversation. In fact, what it allows marketers to do, if by engaging in these three conversations, is to be more of a consultant, take more of a consultative approach rather than just being a producer of making stuff. So by having this conversation, it appears that you're being more thoughtful, you're thinking about the business, you're talking about business issues and questions, and making sure that you have that alignment as opposed to just off to the races and into production mode. The second thing that we encourage marketers to do is make sure that they have the right metrics, that their metrics are outcome-oriented. So earlier we were talking about the kinds of metrics most of the marketers reported on using, and you can see that many of those fell into what were output-based or operationally based type of metrics. We saw that a few of the A marketers are creating some outcome-based or leading indicator, even predictive types of metrics. But here's the real rub. There are so many things that we can measure today. I mean, as marketers, the list is almost endless. And therefore, what's important is to make sure that there is clear relationship of those metrics so that we can see how the activities and the operational are actually related to the work we're doing in terms of outcome and leading indicators, so that there's a story. You know, we all talk about how important it is that marketer is part of being the storyteller. Well, even in our reporting, we need to be able to tell that business story and to be able to use those metrics to make decisions, to understand what is and isn't working. So if we just have a smattering of metrics up on a dashboard, but we can't use them to tell a story or we can't use them to make decisions, then they're probably not helpful. They're not helpful to us to run the business of marketing, and they're certainly not helpful to the C-suite in terms of advancing the business. So if you look at your metrics, think about where they fall on the continuum, but even more importantly, how they work and play together. So as we think through the work you're doing, and we see so many marketing plans, and I know both Julie and Laura do as well, you want to be sure that you're setting quantifiable performance targets at every stage of the work you're doing. So when you say increase the number of leads or improve customer satisfaction, this is not a measurable thing. I'd like to say get more healthy. You know, what does that really mean? What does that really entail, and what will that really look like? So you want to have quantifiable performance targets, whether it's instead of saying something like increase revenue, maybe it's increased revenue for a particular product by a specific amount in a particular part of the world. Instead of saying get more customers, maybe you want to say something more specific like add 12 new customers from a key target list or from your Tier 1 list, by a certain period of time. Instead of saying build stronger relationship at, the senior executive level at existing accounts, maybe it's like get 3 meetings with executives at the ABC company, whatever that is. And, that would be down at the tactical level. That certainly wouldn't be up at the top of the ladder, but it would be certainly much better type of metric than, something as vague as this. Increasing brand equity. For example, increase share of preference by 5%. That's a really good sort of leading indicator type of metric, because as share of preference goes up in time, if that needle's moving to the right, in time market share will move to the right. And then, of course, increase thought leadership and downloads, which would, again, might be a very broad type of statement that a company might use, maybe even as a strategy statement, might be tactically being able to be reflected in terms of 5 initial sales meetings with these prospects who responded to a thought leadership call to action and making it, and so you would see that thought leadership is actually much more of a programmatic effort rather than an objective or even strategy. So the way to look at, if you're looking at your marketing plan and you're scratching your head saying, well, do we do it or do we not do it? And when we look at marketing plans, we try to understand, can we create a data chain from the marketing plan that we can then use as the foundation for the dashboard? And if the answer becomes no, then you have to kind of start back to what we've all been talking about with that alignment. And there are various approaches for doing that. But so the first place to start is, can we take our current marketing plan and can we create a clean data chain between marketing activities and investments and objectives and outcomes? So for example, business outcomes, so like securing some number of those orders in that segment, tying to a particular new platform against that target segment, resulting in some number of RFQs that marketing is going to help drive into a program that's going to have something to do with customer ambassadors who are going to tout the new platform and actually connect with some number of potential targets, and then down into the tactical level, which is all the campaign efforts, maybe all the online activities that are going to touch a specific number of accounts of customers and engage them and help create those ambassadors. So go through your marketing plan, see if you can make that chain, and if the answer is that you can't make that chain, then you need to start with getting that alignment. That's the very, very first place to start, because if you get the alignment right, you can then create the data chains, which will help you build a dashboard that is actionable, because that's really what serves as the foundation of an actionable dashboard. And if you kind of see this dashboard, you can see it's a multi-tiered dashboard that has the business outcomes, which is what the needles we're going to be moving, the marketing objectives that are going to be driving those needles, and then the programs and tactics and activities below that. And now we can see the relationships of those. So if certain things, for example, on the bottom are moving to the right, but the needles up on the top 2 are not moving, then the question becomes, okay, where's the executional problem, right? If some things are working and other things aren't, we can make decisions about stopping to do something and reallocating those resources to things that are working. If the needles on the top are moving but nothing in marketing is moving, that can imply that other things are affecting the business, but marketing really isn't driving the business. So what do we need to do? If our needles are moving, all our needles are moving, but the needles at the top aren't moving, then we could say, are we doing the right things, or is there some other aspects of the business that are not functioning on all cylinders and therefore need to be addressed? So that's the power of a dashboard with the right kinds of metrics and the use of the data chains. So you want to think about your dashboard in terms of how can it be used by the executive team to make business decisions, how can it be used by the marketing leadership to run the business of marketing, and how can it be used by the people inside the marketing organization to be more effective at the work that they perform. So with that, I would like to turn it back over to Laura Ramos to help us wrap up.
You bet. Thanks, Laura. So what a great amount of information that you've delivered here to our audience to help them understand, at what level the dashboard can really help marketers earn that seat at the table. The executive level, where at sort of the highest level, that it's really making that connection between marketing results and how to move the business, the needle on the business. And as you said, to understand where marketing is having that impact and where there may be other extraneous factors that's helping to move the business along. I think it's also important to know that there are different levels to that dashboard, and you may not show the lower 2 levels to the executive management, but you still need to have them there to help support the kinds of operational and efficiency and functional kinds of things that marketing is responsible for doing. It's part of our job, and it's part of that ever-expanding role that we've talked about, and that the research we've done with the VMA recently has also shown. I think the bottom line here is that marketing performance and metrics and the reporting that we do as marketers is here to enable better alignment between what we do and what it is we're trying to achieve and what the business does. I've always felt that marketing's goal is to help advance the business, to grow revenue, to make the business more efficient, and to be able to do that at a rate, at a more cost-effective way than simply adding more adding more products or adding more salespeople. So to kind of get to that point where we can show, that there is that connection between how marketing, brand, demand generation, all these activities we've been talking about move the business forward, that all has to be reflected in the reporting that we do. So in summarizing, and in the way that we manage marketing, for us all to be more relevant to the business, B2B marketers really need to look at how we measure and then communicate upward and outward the metrics that show how marketing drives the business. I think the key steps that we outlined in this are you've got to work with your peers to get clarity around what the business is, what direction the business is heading in, and what the business needs to achieve, not only this quarter, but this year and in 2 to 3 years from now. And what's it going to take for marketing to have an impact on those goals? We need to look at what are the metrics that are going to help us make decisions, that are going to be outcome-based, leading indicators, not things that look back on performance, and analytic and predictive of where we need to go next. They need to be quantifiable, very specific, and don't be afraid to put something down so that it doesn't give you wiggle room to show that, oh, well, we only achieved 19% growth instead of 20% growth. That's a good thing. Being specific helps us know where we are and where we need to get to. It's not something to be thought of as that's going to come back and bite you in the end. The data chain is an essential tool to doing this. Know that you can connect the business outcome all the way back to the marketing tactics. And if you can't do that, then you need to really think about, well, are you using the right tactics and programs, and how do you better align them to draw that straight chain, that straight set of linked connections to the business outcome. And then finally, use those data chains as the foundation for the marketing dashboard. Whatever you're using to think about how these tactics result in good business outcomes, that should come through in the way that you do your reporting, your dashboards, your quarterly assessments and reviews, all of the kinds of activity that you use to communicate with the executive team, the board of directors, the rest of the company about what it is that marketing's doing. So with that, I think we've got some time left for some questions. And Julie, I'm going to turn it back over to you to moderate this.
Great. Thank you, Laura, and thank you, Laura. I think, that was a great discussion of the types of things that marketing needs to be thinking about. And I see if you do have a question, you can use the Q&A function to ask that question. And we do have quite a few questions that have come in, so let me get started here. First question, and maybe this is for Laura Patterson. How can we measure marketing's contribution to market share?
Okay, that is a great question, and we probably don't have time to answer it in complete detail. And I don't know what kind of company is asking this question, but customer acquisition, customer expansion or growth all affect market share. Share of preference affects market share. So as we're looking at what you're going to do in terms of your market, the key business outcomes. So back to your business outcomes, what is it that the business says will help move that needle on market share, and then how will the marketing organization tie to those specific business outcomes? Because every organization will be different in terms of what they're planning to do in terms of their own initiatives to grow their market share. So again, I know it's not really giving you a very kind of maybe exact answer, but it really does start with understanding what is the organization's strategic initiative in terms of driving market share, and then how are you going to tap into that or tie into that?
Yep. And I think that there was a second piece of this, and it's always an interesting question when you think about marketing and marketing's influence, because marketing doesn't happen in a vacuum. There's lots of other influencers to all these business outcomes, and it's not just marketing. And so the follow-up question to this was, how is it possible to attribute outcome-based metrics like market share to marketing when there's multiple organizational initiatives influencing such an outcome metric?
Exactly. In fact, a business outcome is going to be, or should be, affected by more than one entity within an organization, whether that's product or service or sales. So that's why it's really important to have clarity around what specifically is marketing going to be expected to do to impact that outcome. That's exactly the right question. So otherwise, it will be very hard to know how to distinguish. And that's why it's important that the objectives that marketing set are objectives that marketing can own and measure that are directly linked to that outcome.
Mm-hmm. Laura, it's Laura. It sounds so funny talking to myself. One of the things that we've run into, too, is let's just step back to basic principles. If everybody else is claiming credit and you're not going to get the credit. So we need to add marketing's voice, right, to this discussion about
yes, that's a great thing to say.
Where's happening
it's okay for us to add our voice. It's okay for us to add our voice to the choir.
Yeah, okay. No, that's a great comment. Okay, next question. And maybe, Laura, you can talk about this based on some of the research that you've done. What have you seen to explain why B2B marketers have trouble getting clarity with their business peers about expected outcomes and which needles marketing should be moving?
Oh, boy, that's another one we could spend a whole, webinar briefing on. Okay, a couple of things. I think marketing, as we've seen with the BMA data, is the role of marketing is wildly expanding. And to begin with, I've always felt that marketing is one of those functions inside the organization that everyone thinks they know how to do it, and it means different things to everyone. So when you come from this sort of master of jack of all trades, master of none kind of background, and I don't mean to be disparaging, but that's how marketing evolves in a lot of companies. And then you couple on top of this, there's accelerated pace of change and a constantly evolving role in marketing. You get kind of caught up in the execution cycles. It's easy to get caught up in the execution cycles and to not spend enough time with your peers understanding what's really moving the business and where does the business need to go. I mean, I'm just going to go back to the survey that we were doing with the BMA for just a second and say, that the vast majority, everyone said that they expect the pace of change, whether it's being driven by digital, mobile, changes in competition, changes in the market, whatever. They expect that pace of change to continue to accelerate. And almost all of them, 85, 87%, said that they were doing things in marketing that 3 to 4 years ago that would never be considered part of marketing. So you couple that together, plus the fact that most of them are saying they're taking on these increased responsibilities without any change in budget, and you can see that everybody's just running at full-on speed. So if you're running at full-on speed to try to get your daily job done, when is there time to talk to to interface with the rest of the business and figure out, what do we need to do to be more effective? How do we get alignment to the business goals? So I think that, the real answer here is that the measurement and the monitoring of marketing's performance makes marketing look more systematic, more like a functional, organized part of the business in the same way that maybe manufacturing and service does. And then it gives marketing executives the ability to say no to their peers, or to say, look, if you're going to hold me to these standards, you need to be held to the same standards so that they all can operate off of equal footing. Okay, sorry. Tried to cram all of that into a short period of time.
You did a great job, Laura, and I kind of wanted to echo one thing that you said. I didn't want to get lost in what you were saying, and that is, if you are focused on the right business outcomes and you have everything properly aligned, you'll also know what to say no to.
Exactly.
So I didn't want that to get lost, because it's easy to move into the yes mode on everything if you're just a producer. But if you're thinking about, will it move the needle, what is the performance target, and how does it affect an outcome? And if the answer is it's not really going to move one of those key outcomes that we're being held accountable for, then maybe it goes in the parking lot.
Yeah, it can move below the line, because you can also show your peers this isn't going to help you either.
Right.
Yeah. Mm-hmm. And I want to just call out because people should make the connection to what you're talking about. It means, for example, when someone comes to you and says, I want to do this trade show, you're able to show why that trade show investment is not
very
a good
specifically.
Idea.
Exactly. That's the example.
That's one of the ones that in ITSMA members have a really tough time being able to put a stake in the ground saying, no, we're not going to that trade show, and here's why.
And here's why.
Or the opposite. Here's why we do need to go, and because it's directly connected to A, B, and C. So when you have the CFO coming along and maybe deciding to lop off some budget and making a decision potentially, we're not going to do these 3 trade shows, that may not be the right mix or right decision, and you'll be able to know that.
Yeah, based on budget alone, exactly.
That's great. Here's another question, and this is a question that we get a lot, and it's a good question, but I'm going to preface this by saying we probably can't specifically answer the question, and we'll tell you why. So the question is, our organization is not necessarily looking for new customers, but working to gain deeper, broader relationship with our current customers in a fairly small market. What types of business outcomes would you recommend we measure and report to the executives?
Oh, that's a great question.
Yeah, it is a great question.
So things related to share of wallet, customer expansion, or footprint expansion.
Upsell, cross-sell.
There are all great ways to begin looking at that kind of outcome. Now, again, we're not knowing enough about the organization, but there are lots of really great ways to begin to do that. Loyalty, advocacy would also be some others.
And there's a ton of metrics around advocacy, Laura, right? How many times do we get them to reference, to refer, to speak for us on behalf of us, whether it's something physical like a trade show or a conference, or whether they're doing it in the digital world.
Correct. Yeah. So that's a great question, and many companies are in that, have spent the whole downturn focused on making sure they didn't lose any customers. So key metric modeling around customer risk. Yeah, customer churn, customer defection, customer risk, customer loyalty, customer propensity, purchase propensity among existing customer base. Lots of really great, solid things that company can be doing.
Right. So if you want to know, lots of metrics to choose from, great metrics, but if you want to know what specifically to include on your executive dashboard, you have to go back to what are those 3 questions that Laura described, and say, here's the menu of things we could be tracking. What's going to be meaningful to you as the business leader? What do you want? How will you know that we're contributing to the business? So we can't tell you which 5 metrics to use, but we can give you the menu, and then you need to go talk to your peers and your business leaders and find out which of the metrics they're most interested in.
Or which of those metrics will have the impact on what about retaining your customers or marketing to your existing customers or upselling them, whatever, is going to have the bigger impact on your business.
Okay, we are at the top of the hour, so we need to wrap up. Want to remind everybody that you will be getting a PDF of the presentation and a link to the playback within the next 24 to 48 hours. Also, we are going to be having more formal reports of this research. ITSMA, VisionEdge Marketing, and Forrester will be putting out reports, so please look for those. And I just wanted to say a few words about upcoming events for the ITSMA. We're very excited about our up-and-coming account-based marketing, online training, as well as a certification program. So I encourage you to go online and look at the details for that. And those are happening in June and online, July in Wellesley, Massachusetts, and then also in London in September. And in the fall, we're going to be having a road show. We'll be coming to a city near you. Dates are not quite announced yet, but please do look for that. We're going to be looking at the topic of thought leadership selling, how marketing needs to enable this new capability. So it's a topic we're really excited about exploring and sharing with you.
Hey, Julie, it's Laura. I hate to embarrass you by blurting in like this, but I just wanted to say, as a former member of the ITSMA and a good friend, I would encourage folks to take a look at that schedule because, it was a fabulous opportunity while I was at Xerox, and there's always great information that comes from the ITSMA. So that's your plug.
Thank you, Laura.
Happy to contribute it.
I appreciate that. So, well, thank you both, Lauras, for joining me today and helping us bring this great research and insight to the ITSMA members. So appreciate it. And wanted to thank everyone for joining us as well. If your question didn't get answered, we will get back to you. We appreciate the questions. I'm sorry we ran out of time. And also, we have our contact information, and so you can get in touch with us if you'd like to. And hope everybody has a great rest of their day. Thanks so much. Bye-bye.